tuning in from. So super, super honored you've made some time in your day. So let's get to it. We've got a lot to go. Welcome, welcome. And we're going to be covering a lot of things today. So if you got pen and paper, have it ready. I can still see some folks are logging in. That's great. As Daryl mentioned, everything is recorded. And we'll be answering questions, of course, live tonight as well. All right, let's get to it. Let's get to it. So we are here to talk about becoming consistently profitable. It is possible, right? It is possible. Everything is going to be built on that. That brings us to who is tonight's conversation for? Who are we talking to? Well, almost everybody. Options traders, stocks traders, ETF, futures traders. Yes, futures too. Day trading, 0 days to options expiration trading, swing trading, position trading, you name it. Traders, now, this is where we're really going to get to the nitty-gritty of what's happening, which is traders who are not seeing growth in their account that they're looking for, traders who are losing more times than they're winning, getting nauseous from the ups and downs. I start talking with my hands, sorry. Ups and downs, balancing their balances in their trading account, and traders who are blowing up their accounts, getting stopped out, losing money, being frustrated because you just can't seem to get that more that you're looking for out of your trades. That's who tonight's conversation is for. So yeah, pretty much all of us, right? Traders who feel like this, frustrated, discouraged, and frankly, right now, my gosh, not sure what to do next. But we all want to feel, right? We want to go from this trader to this. We all want to feel like this, right? Because trading can be difficult and it can be complicated, but there is a fix. Keep that in mind, gang. There is a fix to getting where you want to go. That's why we're here tonight. And this is what we're here to talk about. So let's kick it off with the things we've got to know. What are the keys to success, right? What are the things that I've been doing throughout 3+ decades? Having the tools and strategies that have been time tested. They've gone through the stressors and the rigors of in many cases, 3 decades, used for a really long period of time, gets us to our desired outcome. As traders, that means consistently profitable, right? Those are beautiful words. Making money year after year in any market environment. And I do mean any, gang. Now, why listen to me? That sounds great, Rag, but why listen to me? Because I've been consistently profitable every year for over 35 years now, right? Yes, I did start once upon a time with a $1,200 account. 35 years ago, actually a little bit more than 35 years ago. And I now trade 6- and 7-figure accounts, right? So the idea here is what's going to be that turning point for everybody. It's mentorship. Mentorship is priceless. And I've been dedicating a lot of years to teaching traders like yourself what I've learned through trial and error, read mistakes and experience, right? So that you can avoid being part of that statistic of frustrated losing traders who aren't succeeding, not the way you want to be, right? Success can be had. Please keep that in mind. I know the statistics are awful. I do truly believe that success can be had. And so this is what consistency looks like. Let's get into a little bit of data here, and I'm going to explain what is on this chart. So I use a program called TradesViz. It doesn't mean that that's what you have to use, but there are a lot of pieces of software out there where you can download the trades that you take in your trading platform and upload them into a piece of software like this. Now, I want everyone to see a few things about this chart, and I'm going to highlight them right now. Hopefully y'all can see that. This is the end of May 2023, and this is the end of August 2024. Now, between September to December, we continued to move higher, mostly in December, and I put about another 20% in this account. But you can see this is right here a look at summer to fall 2023 to 2024. This is what consistency looks like. Not a month, not a few weeks, not a few months. This is over a year. Now, to the left here, what you're looking at is the fact that consistency can have losses, right? Loss, losing, 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 losing. But overall, even though we have some divots in the P&L, And you can see that we're going to have some divots in the P&L. We're going to have some flat times. We're also going to have times where we accelerate, but overall, the best trend we can ever see, as we've said, is the one on our P&L. So this is a very long-term look at the kind of trades that we've taken in the sector secrets mastery. In fact, every one of these in this P&L is a P&L curve based on the sector secrets mastery alerts. And a lot of times people will ask, Rog, what was the starting balance every month for you to have these kinds of gains? The starting balance was, and by the way, this was the first 3 months. So this is the first 3 months of last year. And like I said, this is about 18 months here. And the starting balance usually was about 55 to about 60K per month. And then I spent about 3 months, right? This is 3 months with about an 18K account. So so you can see there's a lot of different account sizes we're going to be talking about. This gives you an idea. Again, proof's in the pudding. I can talk about being successful and consistent, but I want to show you. All right, so let's get back to it. What are the fundamentals for success? And just for everyone's real estate, I'm going to go ahead and I think I can cut my video here. We can focus on these gorgeous charts in front of us. All right, so let's get to it. All right. So here, fundamentals for success. Watch list building. Gang, we're talking about fundamentals here. Watch list building. This is where you need to be spending most of your time. What you trade is more important than how you trade it. All right, keep that in mind. Understand your risk, or even better, quantify it. Risk reward ratios, right? Know how much of your account you should be risking. Right? Max debit is never the answer. By the way, how much of your account should you risk? I would never risk more than 5% of my account in a trade, and it's rarely in that vicinity unless we have a very ideal trending environment, right? So know how much of your account you should be risking. Have a plan before you take a trade. Okay, that sounds pretty rudimentary, right? But what is a plan? It's the setup. It's the execution. Where are you going to trigger that trade? So it's the setup, it's the execution, it's the exit, right? Not just if you get stopped out, but what if the trade goes in your favor and you're making money? What are those exits that you've pre-planned, right? Prior to getting into any trade. This is a big part of what we do, what I do as a trader, which is have the entire blueprint in front of you. So those are the pieces we need. And here's a big one too. Forget about complex options trading strategies. I do not use margin, right? I do not use margin. I do not use Greeks, right? I get long puts and I get long calls. That's what I do. And puts and calls can take you to the consistent account growth you're looking for. I know a lot of times folks say, gosh, Rog, you don't sell premium and you can grow an account? Absolutely. When we just showed you the trading results, these are only long calls and long puts. It can be done, and that's the proof. All right. So think about these things and maybe things you're not doing now. By the way, let me throw one extra in here. Cash account, not even a margin account, because then you don't have to deal with the pattern day trading rule. All right. So right away, if you make some of these changes, you're already going to start to see a huge change in the way you're looking at the market. Well, here's a big one. I get this question a lot. All right. How do you manage your emotions? Well, you develop a trading plan specific to your account size, risk tolerance, and goals. I could say that 100 times. What is your account size? That's going to dictate a lot of what you should and should not be doing. The strategy doesn't have to change, but you've got to understand that there's certain limitations to very small and, frankly, very large accounts. Utilize technology. Having appropriate indicators, effective indicators, is the next part to getting a non-emotional view. And I'll show you in all our chart setups what I mean and how you can do that too. So you want that non-emotional view of what a symbol is telling you. Now, what is this guy doing here? I love this, okay? Picture this. You're building a home. You trust that your roof, the ceiling, the walls will stand up to the elements outside, the rain, the sun, the snow. You're protected. You trust that your water will stay running in your pipes. Your emotions don't get involved because you trust that the builder had a plan, had a blueprint, right? The know-how, the tools, that you can trust because they've been doing this. They've been building homes, they've been building structures for a really long time. Gang, it's the same thing with trading. You develop your plan, right? That's your blueprint. You gather the tools that work for your project. You start the building, rinse and repeat. Having a trusted system that will take away, minimize the emotion, right? We trade what the market is telling us, not what we think, not what we feel, not what we hope, right? We are prepared for all kinds of weather, right? In terms of the market, up, down, and sideways markets. Know why you made the trade. Follow your plan. So let's get to it. Let me show you what that looks like, right? Taking away the emotion, having a plan, understanding risk. So these are all examples from the Sector Secrets Mastery Gang, okay? Really important. This is a trade on the daily time frame of Amazon. But if you remember from that slide early on, everything I'm talking about, all the indicators we're discussing can work for day traders, 0 days to options expiration, swing trading, etc. Right? I'm just going to have specific examples for you, but this one is a swing trade. All the trades, again, this was taken in the Sector Secrets Mastery, which is where I trade live 5 days a week, Monday through Friday. And there are a few tools that you're going to hear me talk about. So don't get too caught up because as we go along, I'm going to explain them to you. Keep in mind, you don't have to have these indicators. You can use the strategies that I'm talking about tonight with your tools, right? And add these to your toolbox if you'd like. There are these ones right here. These are the tools that I found that work the best for getting the information, the data that's most important and most influential in getting me to those solid trades and getting to account growth for all the traders who are taking trades just like this, me and folks in the mastery. Part of consistent account growth comes from utilizing the tools to find a trend. All right, what's the first thing we're going to think about here, gang? How do you grow an account? You focus on trends, right? Then those indicators identify levels. In this case, you'll notice how many automated levels I use, right? So those indicators will identify levels to tell us things such as, where am I going to buy support? Support and resistance, frankly, but support in this example was really important since support is the most likely probability that the trend will continue. Okay, so what does that look like here? If we're looking for continuation, and that's the key to paying ourselves, that's the key, follow through. That's the key to success. So if we look at continuation as the key for a trade to succeed, as well as showing us where to buy the dip, right? That's going to allow us to buy call options. Here, the next big thing that everyone should write down. We're buying dips. We're buying calls when they go on sale at a lower price. So think about it. How many times did we trade down into these gray zones of support? These are the automated zones. We'll talk a lot more about this indicator, but how many times did we trade down into support, getting that call option on sale? Right? Consistency in making decisions to trade setups like this come from the indicators that are going to automate pretty darn complicated metrics like trends and support and resistance, and in this case, historical volatility. Then knowing the price that it's most likely to trade the limits of, in this case, volatility, understanding the math behind this range, right? You don't want to have to do all this manually, do you? This specific tool is called the Daily Price Movement Range, or the DPMR. I'm sure a lot of you have heard about it. If it's brand new to you, the Daily Price Movement Range is actually 6 months. It's not always 6, but it's typically 6 months of historical volatility calculated and then presented to you so you can see the range of where price is most likely to go 68% of the time. So I want to just make sure everyone understands the type of time tested and the high percentage tools that I rely on, right? So this is a swing trading indicator, but you can use this in any kind of market, trending or non-trending. There's another indicator some of you might be familiar with called the hourly price movement range that's used for day trading. So instead of looking at the historical volatility of each session, we go back and look at the historical volatility based on the hour, hence the daily price movement range and the hourly price movement range. Okay, so what do we do in this in this Amazon. I'm going to move the clock over. And by the way, the reason I have the clock here, regardless of what time it is, wherever you are, if there's a specific part of this conversation at some point, maybe you want to rewind to and review, you can just jot down the time. Okay. So that's why I keep that there. All right. So this is a swing trade, right? And in this Amazon trade, obviously there were many opportunities to do this, but in the instance that we bought it, I bought the 195 calls on a move to the daily price movement range, which again is support. And in just 10 days, we took this from $782 per contract, not a crazy amount in terms of cost, is it? To $3,500. And I'm always going to talk in dollars or points per contract, right? As we like to say, dollars and points pay the bills. They keep the power, they keep the lights on, not percentages. So we'll be very specific to dollars and points per contract. So someone who's going to trade 10 of these can think about the numbers in their head, and someone who's going to trade 2 of these can also think about the numbers in their head, right? How that applies to you and your account size. All right, next up. So we're moving from tech, right? This works in all sorts of markets. Now we're talking about a financial stock. In this case, Wells Fargo. All right. So remember we talked about watch list building a little bit earlier. What we trade is more important than how we trade it. Well, how most of your time should be spent building that list. This is a really good example because in order to have expectations of follow through in Wells Fargo, there's a couple of things that need to be in line. Traders struggle because they don't take advantage of trends, right? They're looking for things other than trends. Now, trends aren't just the trend in the stock. It's trends that have alignment across the index, think Dow, S&P, NASDAQ, Russell, the sector, in this case, financials, and then ultimately the stock. This goes to our watch list building conversation that I'm going to be showing you in just a few minutes. We'll get into the process. Wells was a great example of using that rising tide in the financial sector, and this particular bank stock benefited. Buying a call with the probability of moving higher, right, on that dip into the gray zone was the setup. There are 2 major factors in this trade that are timeless, right? That's what we want, consistent, timelessness. And it adds to the account growth. First, all right, let's take a look at this chart here together, because you're going to find by the end of this webinar, you're going to see these trades without even me pointing them out. First is the confirmation of the trend using the multi-structure. The multi-structure is this set of just simply 2 colors at the bottom. Multi-structure tells me what the momentum, the MOMO, is doing. That's the top row, and the bottom row is trend. All right. Now, take a look at the color of the candles. It is consistently and dominantly green. These are called the top tier candles. These tell me that the participation was bullish and the price action was bullish. All right. And again, the last is, as we said, the alignment of a strong stock in a strong sector. Okay. Now, could you trade this with a $5,000 account? That's a great question. Could you trade this with a $5,000 account? Well, what's going to typically happen, all right, is imagine that, if you have $5,000, and I mentioned earlier, I don't want you risking any more than 5%. And oftentimes, I'm going to recommend a lot of traders maybe be in the 2.5 to 3% area. If you're not going to risk more than that of this account, right, think about how many dollars is 5% of 5,000 or 3% of 5,000 or 2.5%. That's your allowable risk. Now, if the loss, let's say we lose, if the loss can be contained by risking no more than say 2.5 to 5%, then yes. And simply what that's going to mean more often than not is in a smaller account, you're going to trade setups that are on the less expensive side of things. Now, something like Wells Fargo is going to be usually, this is the sub $100 stock. It's not terribly volatile. This is a stock that you're likely going to be able to pick up for anywhere from $150 to $300, typically on a dip. That's very affordable. Say Amazon may be a little bit more difficult, right? But Wells would definitely be very, very favorable to a smaller account. So it really depends on the cost of the trade. But the idea here is that a small account would trade very few contracts, and a large account, frankly, like myself, I can trade a lot of them. So while I might be trading 20 or 30 contracts, a small account might trade two or three. All right. So thank you for that question. Um, so let's keep going here, and I'll tackle a few more things. All right. So that was Wells Fargo. Let's keep moving on. Watch list building, right? Remember, alignment of index sector stock. This chart is of the NASDAQ. All right. Now, what I would love everyone to think about here is, what am I doing right now? And what are some of the tweaks that I can make based on what we're talking about here tonight? Maybe I'm not looking at the sector. Maybe I'm not looking at the index. Maybe I'm not focusing on trends, but instead I'm focusing on what everyone else is talking about, or some stock that gapped up or gapped down today, right? Notice I'm not talking about any of those things. We stick with the process. So NASDAQ, that's the top of the food chain. If the NASDAQ is generally moving higher, as you can see it was in this period of time, look at the green candles, look at the multi-trend. Is there anything bearish about the bulk of what's on this screen? Think, okay, Rog, you told me green is bullish participation, bullish price action. You told me that the multi-structure measures momentum and trend. And by the way, the green on the multi-structure is bullish. Okay. So is there any reason to be anything but bullish on the NASDAQ? No. And this could be a NASDAQ trade. It could be a QQQ trade. Or let's go to the next slide. We could crack open the NASDAQ and look at some of the magnificents, Apple, Nvidia, Microsoft. Or we can look at the heaviest sector within the NASDAQ, in this case, the XLK. Now look at how many stocks have a bullish momentum. Is that Momo that's green? Or a bullish trend. Look at how many stocks in this group. These are the top 14 names, by the way, in the NASDAQ. And this kind of layout is really powerful because I can look at the top 14 names. Percentage-wise, it's the vast majority of why something like the XLK is going to move. Most of them are moving higher in some way in terms of momentum or trend, right? So sure, I could trade Cisco, I could trade ACN, I could trade Qualcomm, or I could just trade the entire group by trading the XLK. How many of you here have never thought about, oh, wait a minute, I can trade the sector? I can trade an option on the sector? Absolutely. And that's exactly what we did in the case of XLK. I bought the 205 calls, right? After that really quick, easy to identify index sector stock alignment, I bought the 14 June, in this case, this is a summer trade, 205 calls for $4.70. Now, there was a question earlier about small accounts. If you have a small account, can you afford at least maybe one or two of a $470 option? Probably yes, right? If you're a large account and there's a lot of open interest, liquidity, do you think you might be able to trade 20 of these, 30 of these? Right? Me too, right? Some of you might even say, Rog, I would look to trade a lot more than that. Sure. This is where small accounts and large accounts are doing the same thing with a different number of contracts. So imagine as your account grows, you're going to be able to trade more and more contracts. So in this case, that $470 205 call, right? That 205 call went to $1,220. And then ultimately, because we were doing what? Following the trend. Look at all the green candles. Look at the structure. It finally topped out at $2,055. This is not making a huge bet, gang. This is not risking too much of my account. This is not home run hitting. This is find a trend and remember that if it's going to continue, that's what's going to help grow your account, which takes us right back to what we trade is more important than why we trade it. By the way, I had to close this at just over $2,000. It kept going. I just ran out of time because of expiration. Okay, that's how powerful trends can be. And by the way, gang, you might be saying, Rob, do we have trends in this current environment? By the way, yes. We're right now long gold in the Sector Secrets Mastery, and we just took a quick trade and a quick win in RTX. Yes, gang, there are always going to be trends. So right around the time your head's thinking, oh gosh, Rob, look at all the chop. Will there always be opportunity to take advantage of trends? Yes, and you know why? While money might come out of, say, semiconductors or technology, money doesn't get put under the mattress, gang. It's going to flow somewhere. Our job is to find that trend. Here's a completely different kind of symbol. All right, we talked about kind of common names that a lot of folks are familiar with, Amazon and tech and NASDAQ and XLK. This is the XLU. This is the utilities ETF, and it's a defensive ETF. So when folks are scared, they're concerned about NASDAQ or S&P strength, a lot of times they'll start looking at sectors like XLU because it's a defensive. We're always going to need utilities, right? Sometimes money will flow here, and that's exactly what we took advantage of. So you're getting the gist of this, right? By this time, and we're only what? We're 27 minutes in. Right now, everyone's thinking, Rog, I can read that multi-structure, bullish momentum, bullish trend. My gosh, it's only green. And by the way, I captured a lot of times a lot more of the chart than I actually needed because I wanted you to see just how consistent this is over time. Yeah, I'm plucking out one setup because we had to talk about a trade. But the reason I give you so much of this chart to look at in each one of these slides is I want you to see how long these trades can persist and how many opportunities when we automate the zones of the daily price movement range volatility, right? When we automate the trend and the momentum, when the green candles are just marching higher, you have multiple opportunities. In this case, I bought XLU. I made $300 per contract. I traded about 20 of them, right? Could a small account trade XLU? Absolutely, right? Absolutely. So if you're wondering, can you have a needle moving event in your account? Sure. If you traded 20, well, that was the P&L. If you traded 10, it would be half of this, right? If you so call it about $2,100. If you traded 5 contracts, it'd be half again, right? So please remember, just because you see how many contracts I traded, even if you traded 10 contracts, these are still really good needle moving numbers. So think about your account size. And also remember, is XLU a symbol a lot of folks talk about? Or was this a symbol that gave us a trend? I'm not going to fall in love with a particular stock. I just want to know where those trends are and then follow them with the automation of these tools, right? So remember, the automation is going to help. Understanding the trend is going to help. Let's talk about another stock. In this case, it's Citigroup. All right. So this one's an interesting one. We're going to shift gears a little bit. And here's where I think a lot of traders, if you want to take notes on what to do with choppy markets, this is going to be it. Because in an uptrend, when things are going our way, yeah, it's all good and confetti's falling from the sky and everyone's smiling. But what do you do when the trends start to fizzle and things get choppy? I mean, chop suey, right? How do you stay consistent and still grow an account when the markets start to move sideways, right? What are the tools and the rules around non-trending setups, right? Well, first, here's a really important thing, gang. Even in chop, please write this down. Even in chop, there's always going to be some kind of directional bias. There's always going to be an inclination for price to move in a certain direction, right? And that's the direction I'll look to find even in chop. In this case, well, I think a lot of you are going to say, Rog, that's an easy choice to make. Look at all the green candles. We're making, for the most part, higher highs and higher lows. I can see that we've been flirting with bullish momentum, bullish trend. Now, a question that some of you might have is, Rog, what is this color here? That's actually bearish, that magenta color. And what about all this gray? That's actually neutral. Is neutral bearish? Nope. Is neutral bullish? Nope. Then what is it, Rog? Neutral is always, and you want to write this down too, gang. Neutral markets are always going to be influenced by the trend that immediately preceded it. So if we're coming out of an uptrend, we go neutral, expect continuation rather than reversal. And you know why a lot of traders get hurt? They presume every broken uptrend is a downtrend, right? Who's been there? A lot of folks have. So remember, continuation after a trend goes sideways is still the most probable direction. All right. So in this case, a city, it's moving sideways, but I'm bullish because the candles would suggest staying bullish because they're green. Where do I want to get bullish from? You ready? Okay. Use these automated support and resistance levels. This is known as the Darvis. I call it Darvis 2.0 or Darvis 3.0. It's built on an understanding of Nicholas Darvis, but we modernized it for the markets that we trade today in 2025, not when Darvis was trading in 19, say 55, right? Now the Darvis automatically finds a support and resistance for you. It's a process, it's built into the code, and it does it with no emotion, with no bias, with no error, right? So it finds a support and resistance. Now, on top of that, I can use the daily price movement ranges, which are automatically identifying the zones of support and resistance based on historical volatility, right? When these two tools are stacked together, that means it's a price-based reason for support and a volatility-based reason for support. And two reasons, more than one why, is always better than one. And what I teach traders is find the zone and buy as close to the support, maybe the bottom quarter or the bottom half, as you can. Think about how many times you were able to do that before it took off. Rather than what most traders do is they buy here. We're not doing that. I'm not chasing this higher. I'm not a Jack Russell running after the school bus, right? I'm going to find those great dips. I'm going to find where, as we mentioned earlier, I can buy the calls on sale. All right. And by waiting for a sale, I was able to pluck out $540 per contract. This was a very inexpensive option because you can see I traded 35 of them. So that question earlier about small accounts, gang, what we do and what I've done throughout my career is I don't want to trade $2,000, $5,000 options, right? I would rather, even with a large account, have multiple contracts of more moderately priced options, which that philosophy also lends itself really well to accounts that are in the seven figures, right? Like some of mine, and even to accounts that are under 10,000. Because the only difference between what we're both doing, say five-figure accounts and six-figure accounts, or even seven, is how many contracts we trade. So hopefully that's a real important, maybe slightly mind-blowing idea for a lot of traders who are thinking, oh, do I need to reinvent the way I trade if I'm trading a large account or a small? Nope, you do not. Okay. All right. Now, there was a question earlier that what do you suggest for a basic education on options trading? If I may be so bold to say, you're getting that right now, right? Because I don't use Greeks. There's nothing against them. I'm not saying they're not useful to some traders, but I've built a career on not using Greeks, right? You're getting it right now. What are you learning? You're learning those foundational things. For me, I'm buying calls and I'm buying puts. That's the most rudimentary and most basic building block of every advanced option technique. Remember, gang, we can only buy or sell an option. And depending on what combination and how many of those buys and sells of calls and puts we're doing, there's a myriad of different option strategies. But please remember, at the end of the day, we're either buying a put or selling a put. We're either buying a call or selling a call. There's only four things we can do. I choose to focus on the long call, long put side of things, right? And so the best education would be start with getting really good at just understanding that you can be a buyer of calls and a buyer of puts. When you get that timing down, which is also what we're talking about here, right? How do I understand the structure? How do I understand where the zones are? How do I understand things like alignment of index sector stock, right? You're getting that right now. I mean, that conversation about how do I become a fluid, consistent trader? We're starting that off. We're 36 minutes in, you know what I mean? All right, so kind of with that in mind, the tools, strategies, and principles that we're talking about and use every day apply to any sized account. Again, I would recommend nothing any smaller than 5,000. And I'm talking to, I'm talking, oh, yeah. Expiration. Oh, yeah. The Trish, by the way, I know a lot of you know who the Trish boss is. And for those of you that don't, I know a lot of you are very new. And by the way, if this is the first webinar that you're joining me for, again, thank you for your time. Looking forward to seeing your questions when we answer Q&A. And Trish boss said, hey, let's talk about expiration dates for a moment. And that's another, and kind of going back to what would I suggest for a basic education, and expiration dates were definitely something I wanted to talk about. Yeah, is there a slide here? It's 17? Okay. So slide 17. All right, let's go back to that last example. All right, I got oh no, this is the current slide. All right, we're on the expiration date slide. Oh, perfect. The Trish boss is saying let's talk about expiration dates. Here's another really good, important, basic option trading foundational idea. What expiration date do you buy? So here we are. This is GLD. All right. And in this example, I'm buying the ETF of gold. Now, yes, you can trade gold futures, you can trade gold miners, etc. GLD is a really nice, liquid, affordable option contract. So a lot of folks ask, okay, Rob, if you were to trade, say, GLD as a day trade, so that would mean one, I'm looking at a 5-minute time frame, and two, I'm looking at just today. A day trade really is a today trade, right? Just today. I would look at an expiration of Friday, right? If that's where the liquidity is. If it's an option that trades Monday, Wednesday, Friday, again, I look to whatever the closest expiration is. If it's a 0 days to options contract and it trades Monday, Tuesday, Wednesday, Thursday, Friday, again, whichever one, and write this down, gang, has open interest in excess, ideally, of 1,000 contracts. You want to find liquid, right? You want to find liquid strikes. So important. Don't wander into liquid strikes. Why? One, sure, someone might be willing to sell you the option when you're going in to bid, when you're going in to buy it. But what happens if you want to get out? Who's going to be there to take that off your hands? A lot of times the spreads are going to be very, very wide. When you're getting out at a loss, right? The spread, if it's wide, just makes the loss even bigger. So we want good liquidity and tight spreads. Typically, write this down as well, spreads no larger than 10% of the bid. So that high open interest is really important. Okay, so whichever is the closest expiration, if we're day trading with at least 1,000 open interest. Okay, what about swing trading, which is what I did here with gold? All right, so for swing trading, I would want at least, so now we're going overnight, multiple days, maybe weeks. I would want at least 10 to 14 days. Now, if this is going sideways, like the example we had of Citi, right? It's a sideways market like we looked at in Citi. I don't need a bunch of time, right? I don't need a bunch of time. So 10 to 14 days is great. But if there's a trend, like there is on gold, how do you know if there's a trend? Yeah, Rog, way ahead of you. I can see the multi-structure. I can see the consistency of the green candles. I would like more time. And I would say at that point, you probably want to go 2 or maybe even more than 21 days to expiration. Give the trend more time because you're going to get possibly more follow through, right? And so that's really where I would recommend your expirations be, right? Now remember this too, right? More time doesn't necessarily give you an advantage unless there's a reason for it. And one of the costs of an option is how much time. So if you're continually buying more time than you need, or if you're continually buying really deep in the money strikes, it's probably going to hurt the number of contracts you can buy because frankly, you're buying something that's more than you need. It's more time or it's more in the money. So don't spend your dollars on things you probably don't need because part of trading is getting the best bang for your buck and being able to buy multiple contracts, right? So keep in mind what could be making your option super expensive and unaffordable, right? So again, bottom line is if there's a trend, I'm going to use more time, like this example in, let's go to gold here, as opposed to city where we had a chop, right? And if there's not a trend, I won't need as much time. Use that as your guideline, and what you're going to find is that consistently you're able to get the best bang out of your buck because you're not paying for things you don't need, right? That makes sense. All right, moving on to our tool strategies and principles. So GL, yeah, somehow or other, I skipped right over that slide. So that's how I choose expiration for day trading, for swing trading in trends, and for swing trading in non-trends. So notice everything has a guideline that I just follow. That's the plan. It's time tested and I follow it. All right, so here's another example. It's another choppy example. All right. Now I'm going to show you this. It's not about only buying calls, right? If I have a downtrend, which is, look at this, that pink color, that's a downtrend. That's bearish momentum. That's bearish trend. And you might think, okay, Rog, if you were buying support and buying calls, can you go to resistance and buy puts? Absolutely, right? So here, yeah, I could buy puts, right? But here I could buy calls. So you could see the same tools are going to allow you to take advantage of bullish and bearish markets. Now, in this example, I did buy calls. So the bottom two rows, again, are called the multi-structure. And this is where the momentum and the trends are clarified to a simple color-coded system. Again, green is bullish. I'm sure a lot of you are already getting it now, right? Green is bullish, the magenta is bearish, and gray is neutral. So 42 minutes in, you're already a pro at reading the trend, yeah? So gray is neutral. But remember, gray is neutral, but it's influenced by what? The trend that preceded it. In this trade, the multi-structure is green, so shocking, I'm bullish. The top tier candles, these color-coded candles, again, green is bullish, red is bearish, yellow is neutral. The light shade is an up candle where it closes higher than it opened, and the dark shade is a down candle where it closed lower than it opened. So that's traditional Japanese candlestick stuff, right? We just keep that in these top tier candles. So these candles consider price and participation to color code it, giving me a candle by candle instant read on the direction and the most likely follow through of any symbol, any time frame. Gang, this works in a weekly time frame. It works in a 1 minute time frame and every other time frame in between. So in this trade, the candles are green, I'm bullish. Right? Now, I will also sometimes use what's known as a top tier wave. And for whatever reason, I don't have this on this chart, but that's also another automated support and resistance level. How many of you like to trade mean reversions, right? Pullbacks to the mean? That's what that does, the top tier wave. That's its only job. Where's the mean? And is there a trend, right? So that's one of the most powerful mean reversion zone I've seen in my decades, right? So the top tier wave, similar to those GRAY candles, they process, they compute price and participation of any symbol, any time frame, and in real time. And in this case, here we're looking at Pepsi, and here's the chop. See, here's my support. I buy the options close to it, right? There's always going to be a handful of examples, sometimes in a single chart. And so we bought calls when we got down to that range, $540 a contract, traded 16 of these. Again, growing the account with a consistent approach. So there's another choppy market example. And please keep an eye on these choppy market example explainers as I go through them because we're dealing a lot with this right now. All right, XLF. All right, let's think about something here for a moment, gang. Win rates are something everyone discusses. It's thrown around a lot, you know? But talking about win rates is irrelevant if we don't talk about losses. Think about that for a moment. Talking about win rates is irrelevant if we don't talk about losses. Let's say you have a 65% win rate, which means you lose 35% of the time. And as with many sports, especially martial arts, how many martial artists out there? Right? Or, hey, this is one of those things everybody knows. Yeah. In martial arts, part of the learning process is learning how to fall. Falls are going to happen. But if you know how to fall, the injuries are minimal, if not at all. The key here is knowing how to fall. In our world, right, the martial arts of trading, it's how to take a loss. the trade did not go as you and I expected, but if I know how to fall, right? If you know how to fall, your injuries are going to be far minimal, right? Losses should not have that big of an impact on your account. You know this, right? We know this, but how do we do it? You know how to set yourself up for when, not if it's going to happen. You have a risk-based mindset, right? It's not fun. I don't like to lose. Even after 35 years, I win more often than I lose, but I still hate losing, right? But it's part of what you need to learn and you can master it. For me, it's a hard stop. And you might want to jot this down. You ready? That means if I'm down 25% on premium paid. So what that equates to, and this is a loss, right? So what that equates to is if I bought an option for, $1.07, and I basically lose 25% of what I paid, I might give it a wiggle of about 5 cents, right? And that's just something that I'll do so that I'm always feeling like I've got some choices and I'm not, scrambling to get out. But for the most part, when I lose 25%, or as you can see here, the way that we lost on XLF, I lost $28 per contract, right? So when I'm down 25% of premium paid, I get out of the trade. We call that a paper cut. I don't want to lose a finger. Paper cuts sting, but I'm not going to be taken out of the game. It's not going to psychologically mess me up, and I can still come back, right? Because I know how to take a fall, and I can keep trading. So know how to take losses in such a way that it has no impact on your growing an account. It's just a reasonable and expected part of your trading life. A lot of traders, I will tell you, don't talk about losses. I don't know why. I love talking about losses. If you don't have many of them, right, my win rate, by the way, is usually between about 65 and 72%, which means I lose about 3 to 4 times out of every 10. But because they're not catastrophic, 10, 12, 15%, 20% losses, my P&L can do this. I'm going to have dips. You'll see them. I'm going to have flat times, but I'm not obliterating my account with reckless trades. Okay? I lost almost $1,000, $840. Right? Do you think that's going to matter much in the context of the kind of trades and wins that you've been seeing? Of course not. Traded 30 contracts. Not a small trade either. Okay? All right. So that's what losses look like, and that's how we need to think about them. So how do you get your trading account to grow consistently? How do you get that consistent growth? And that's the big question, isn't it? It all sounds great, but how do you get your trading account to that level of confidence and consistent growth? That's what we all want, right? Well, we know the answer, don't we? Education and practice. So imagine anything you want to get better at. I still do this way. A skill set, a hobby. We all see, by the way, we've all seen this, that 30-day idea, go through some program 30 days later, that's great. But frankly, you and I both know it's just the tip of the iceberg to hone in your skill, right? But imagine if you commit 1 hour a week, just 1 hour a week, to your trading journey, becoming a better trader, really changing your trading life. But now you have the resources of a private trainer or an instructor available to you for 90 days instead of 30 days. So now we're talking really hardcore training, creating an immersion that's going to lead to transforming your trading. Not a little adjustment, not a tweak, completely overhauling and transforming your trading. 30 days is a nice start. At 90 days, you're really going to have honed in on your newfound skills and the outcome of creating a plan that can lead you to the consistent account growth that you're looking for. All right. So here's what we're doing, right? This is what we're talking about here. And I'm super excited for this. The timing could not be better. We have a Sector Secrets Mastery Immersion coming up. Throughout this whole time here, we've been talking about the kind of trades we take, and this is when you get to participate in what we do. All right. So welcome to the first time ever Sector Secrets Mastery Immersion. So on Tuesday, February 18th, running through May, or in some cases, depending on what you want to do here, next February, right? We're going to be getting together 5 days a week from 9:20 to 11:30 for live trading, watch list building, managing our trades in the Sector Secrets Mastery, right? But with this immersion, rather than meeting for a class, which, let's face it, can feel like you're drinking from a fire hose, for 4 or 5 hours, we're going to get together every Wednesday for classroom time, training time, getting into the nitty-gritty topics that you need to understand to have consistent growth in your account, right? So we're going to meet for class time every Wednesday from 12 to 1 p.m. Eastern, starting on Wednesday the 19th and then running for 12 weeks, all the way to May 7th. We're going to be taking an extensive dive into all of the various trading topics. This is going to be including, but certainly not limited to, understanding and quantifying risk. In other words, knowing how many contracts to trade that's appropriate for your account, right? And yes, this is absolutely going to apply to smaller accounts that are $5,000 or larger accounts that are, say, $500,000, right? How to manage your trades, how to find targets, how to take profits, how to handle losses in a way that doesn't send your account and your brain and your emotions spiraling down. Right? Each week is going to be a new topic that we're going to cover in our classroom time. And this is where the immersion is going to become your transformation. So I'm going to break down each piece of these packages over the next few minutes. Cool? All right. So you can see here, by the way, of course, you're going to have access to the Sector Secrets Mastery. That's my trades. You're going to sit in there personally with me and see exactly what I'm doing, what price I'm entering at, etc. Right? Then you're going to have that 12 weeks of the class session with me, the top tier pro indicator package. So all those indicators on my charts, those top tier tools, you're going to have an installation session. You're going to get those automated support and resistance levels that we used. The gray zones that I was showing you where I was buying the DPMR. You're also going to get how I do that same thing with day trading or short-term time frames with the hourly price movement range. So you're going to get those two indicators as well as that indicator installation. So that's what's part of each one of these packages. And depending on which package you go with, which we'll get into more in detail, you're going to get a different amount of time or a different set of those tools. So we'll go into a little bit more detail here. All right. By the way, I'm always thinking of our members, right? So of course, if you're a Simpler Trading member, Sector Secrets Mastery member, number one, thank you for being here. Number two, we've got a special deal for you. And so this is going to be your member pricing. By the way, for those of you that are already members, right? If you have a specific question such as, hey, Rag, I've already got the top tier tools or something, please give the office a call and they'll help you in terms of getting whatever tweaks you need. All right. So we've got you covered. We know there's a lot of folks at different scenarios if you're already a member. By the way, what are you becoming a member of? Right? What is the Sector Secrets Mastery? This is the room schedule. Right? Monday through Friday, we start our day at 9:20, and our schedule is very consistent, as you can see. So we start looking for day trading opportunities, trades that last at least one trading session. All right. After putting our day trades together, putting that plan of the entry and the exit together, then we're free to go on to swing trades. And we do that for the second hour of the day. And we can do that while we're managing our day trades, right? These are trades that last from a few days to a few weeks. And by the way, swing trading, for those of you that have limited time to spend on the market, it's going to be ideal, especially the way that we do it in the mastery, okay? So then the third thing that we do, and this is to fully cover all sorts of time frames, once a month. We just did this past Tuesday. We get together live to go over longer term portfolio position trades, right? And these are positions that we're using shares to basically build a portfolio, a long-term portfolio of trades, right? So along with those sessions, you're going to have a weekly tech session and 2 scalping sessions. So yeah, I don't do a lot of scalping myself, but those sessions, the tech session and 2 scalping, are done with Lorna. And the tech sessions are ongoing every week. So that is not going to be the bottleneck in your trading life. If you struggle with, oh my gosh, Rag, the tech keeps me from becoming a good trader, getting these charts and the order entry and all this minutia, we do a tech session every single week. That is not going to be the problem in the mastery. We cover that every week. The basic and the pro packages get a 90-day membership, right? So 90 days, and the elite package gets 1 year of membership. But wait, there is a whole lot more that you get with your membership aside from all these things that I've just talked about. All right, what else do you get? All right, Rog, what else do you have for me? Oh yeah, we got some good stuff. We have weekly notes, right? If you can't be in the room all the time, you get notes that I'm making to myself, and I give you that link every week. So if you want to clarify something we went over, here's your resource in a nice text form on these notes. It's a link that I give you every week, and you can see what we talked about. You could see watch lists. You could see the trade ideas. It's almost like you were there and you're reading now the cliff notes of the day. It's really cool. You get the top tier outlook, right? This is a weekly newsletter that I write every week that's going to give you an overview of the week's hottest topics, hottest trends, and the symbols that I'm looking at. It's really your cheat sheet to direct you in a really easy, quick way to the timely happenings of the week. And that comes out once a week. All right, daily trade review. All right, so I pride myself. It's a really important thing. And members have really asked me a lot about this. Rob, every day, can you tell us where you bought whatever our Sector Secrets Mastery Alerts triggered at? Can you show us what you've got? And we have a saying, every entry, every exit, every day. If you want to know what we traded and how things worked out, you're going to get full, really easy synopsis of that every single day. So right now, for example, I sent out an alert that reminded everybody that we're still long gold, right? And all the levels we paid for to get in and all the targets we got out. And we're actually still long RTX. So I sent that daily trade review out. We have premium videos. Somebody say, Rog, how about a video? Yeah, every week I take a deep dive into current topics. So you have even more context to what's happening. So in about 15 minutes, you've got a really good synopsis of where you need to be paying attention. So I'm really cognizant of not everyone has a lot of time to dedicate to this. So you really can pick and choose how it is you want to dedicate even as little as maybe a couple hours every week into your trading life. And we also have the Learning Center. So this is a library of topics broken down into bite-sized explainers. What are those most commonly asked questions and topics? And this is very self-paced and awesome. That's our Learning Center. Real-time alerts. You're going to get the trade alerts from me. Now, our trade alerts are really cool. And this is where you're going to get the setup for the trades that we're taking. So and by the way, what I was showing you earlier in the presentation, this slide right here, those are all trade alerts. Okay, those are all trade alerts. It's really important to me that if I'm looking at something and I'm taking it, I'm letting you all know. Here's the trick. All right, here's the secret, the key. I'm going to give you the alert before we take the trade. Oh, wait a minute, Rob. These aren't fill alerts, gang. Trade alerts are exactly that. It's a heads up on the setup that we're looking to trade. So when I know that I want to trade that thing, you know. And so that way together, we're waiting on our trigger and no one's playing catch up, right? No one's feeling left behind because we try to give everyone a heads up on the trading idea. And of course, if I'm on the mic, it's being recorded and every session is archived. And just like we're doing here tonight, I put a clock on the screen so everyone could go to that point in time that they might want to catch up to and check that out. So let's say you only want to keep an eye on the swing trading conversation on the archive. Great. You could fast forward to 10:30 on this clock and then catch that. So we make it really easy to take advantage of those archives. All right. Now, here's a big thing, gang. We've never done this before. Weekly study classroom sessions for 12 weeks. So along with the full access to the Sector Secrets Mastery, we also have the weekly strategy classroom session. So again, rather than that 1, 4, or 5 hour deep dive on the weekend, I'm going to be there with you for the next 3 months. And what a year to have a 35-year seasoned trader by your side. I couldn't have planned it any better, because if you can trade an environment like what we're dealing with here in 2025, believe me, you can trade through anything. So I love that we're going to be able to be together, that I'll be your trainer, your mentor through some of the toughest trading we've seen in a few years. Yeah. So starting Wednesday, February 19, 12 to 1 p.m. Eastern, every Wednesday through May 7. These 12 hours of classroom and study sessions are included in all the packages along with the mastery. So when you look at those packages, take a peek at, what it is that you need or what it is that you want. And then you can say, okay, Rog, I definitely want to be all in. That's the elite. Rog, I need those top tier tools. Great. So again, we've given everyone some options to get what is going to work best for them. All right. So any specific questions that you might have, again, just reach out to the office, all right, on those packages. So these classroom sessions, again, are going to be that great incremental, bite-sized, manageable, right? Over those 12 weeks, it's going to give you an edge in your trading skills, and you're going to be having this time with me as we're going through this very interesting year. Okay, so over the next 12 Wednesdays, we're going to take an extensive look at the nuances of becoming consistently profitable. What are the things that I know that I want to share with you that I know are going to make the difference in the consistency of what you're doing and how you're trading? We're going to take what we learn in each of these study sessions, and then we're going to go put them to work in a live environment in the mastery 5 days a week. And this is how the transformation happens. And this is where that transformation is going to happen, right? These are basically, if you think about it, your private tutoring sessions. I wish I had a private tutor when I was learning how to trade. All right, if you can't make any of the classes or you might miss some of them, don't worry. Everything's recorded, gang. Everything's recorded. All right, so let's talk about this pro package for a moment. Again, 90 days of the membership, the 12 classroom study sessions that we just discussed. That's 12 hours of class time with me answering your questions. You get all of that, but we added to this the bundle of the indicators that we talked about tonight, right? And those top tier pro tools. That was the multi-structure, the candle colors, right? So in that bundle, just to remind you all, this is what you're going to get. Again, the tools are really important, right? Your color-coded candles, trustworthy time-tested tools that measure the key levels of price, participation, and trend, and being able to have that confidence to quickly see that directional bias, quickly see the trend, automatically find the support and resistance. The top tier pro system works for day trading, by the way. You'll see the exact same layouts I'll use for day trading, swing trading, and those position portfolio trades. Okay, and those longer term trades I hold from months to years. And if you want an example of a trade like that, we bought XLK. Now this is a longer term trade. We bought XLK at $122. Okay, we bought McDonald's at $153. Right, we bought Google. Everyone know where Google's at right now? I think we bought that at 151, if I remember. So these longer term trades are really powerful too, right? So this is your toolbox. The top tier collection is made up of the top tier GRAY candles, the Pro Wave, the Pro Multi-Structure, and propulsion dots, as well as my absolute favorite overbought, oversold tool. We didn't talk a lot about this, but this is the secret squiggle. If you want to know if something's overbought, if you want to know if something's oversold, this is the ticket. Best oscillating indicator that I've ever used. By the way, you're not going to find these tools anywhere else. When we first introduced them, they were part of a class, and they have been unavailable as a standalone ever since. All right, so they're not available anywhere else. And by the way, once you join this immersion, they're yours. That's it. They're yours. They're yours to keep. And you're also going to get, and this is something we added in. The Trish boss said, Rob, we got to give them the Darvis 3.0. That's your best automated support and resistance tool. That's going to be thrown in there as well. And it is. The Darvis 3.0 is going to be included as a bonus. And what good are all these indicators without a tech session? So getting new indicators are great, but what if we don't know how to set them up, right? So with that in mind, you're going to get a dedicated tech session with Lorna to get those top tier pro tools and the Darvis set up on your charts before we start the immersion. So on day one, we get most of those tech questions, glitches, all those little annoying little tech things out of the way. The tech session is going to be on February 14 at noon Eastern. And of course, it's recorded. And this is, by the way, this is an extra session. It's not including the weekly tech sessions you're going to have as part of being a member of the mastery. So tech is an ongoing part of our our mastery room. Okay. And the sad thing is, and the reason we make it such a big deal is how many of you said, Rog, yeah, the tech part's where I've gotten stuck, right? Getting my indicators the way I need them to look, that's where I've gotten them stuck. That's not going to be the case. We want to avoid this happening to you. The bonus tech session is super invaluable. The ongoing tech sessions are amazing. So you're not wasting your time trying to figure out how to get your tools set up. Bring those questions. All right. So that's the tech session. Oh, here we go. That's the tech session on February 14th at noon to get all those beautiful indicators set up. And then the elite package. Well, I know a lot of you say, Rob, when we look at the elite package, especially for those of you that are already members, yeah, that's a no-brainer, because when you start to add up all the different indicators and all the different things to the package, you realize that the elite package is, yeah, I'm amazed we even were able to put this thing together when I look at what's included in it. So you get everything we've talked about, except for, instead of just 90 days, which is still great, you're going to have the mastery for a whole year. So it's a full year to take advantage of everything that we're going to learn through the classroom time of the immersion, putting your knowledge to work in a live environment with me for a year. Think about what you're going to know. By the way, in just over an hour, think about what you've learned in just this webinar. Now imagine an hour a week for the next 12 weeks, and then with me, 2 hours a day for the next year. All right. So the elite package includes the top tier pro tools we talked about, plus that 6-month subscription to the HPMRs and the DPMR. So this is where you get everything that we talked about here today, all those tools that we've gone over here tonight. So for those of you that already understand the data and the power behind the price movement ranges, you know how frankly magical they are. And for those of you that are new to price movement ranges, this is an algorithm basically. I know it sounds so fancy, but it is an algorithm that I created about a decade ago. You're going to be scratching your head wondering, how did I trade without those gray and gold zones on my chart? They're going to blow your mind. If you've never used these, it's absolutely going to amaze you. All right, so that's going to be in that elite package. So total game changer. There's a special tech session dedicated to those just for, this is a different type of indicator. Lorna's going to walk you through the installation of that, and you'll have everything you need to fully understand the power of the price movement ranges and historical volatility. This is an indicator that doesn't exist anywhere else, gang, because I created these right around the time I wrote my third book, where I started experimenting with the idea of historical volatility as support and resistance. Again, it doesn't exist anywhere else. And I think once you put these on your charts, you're going to be amazed. And when you put all these tools together, along with the mastery trades, just like these folks here, these are just a handful of things our members have had to say, right? And as you can see, whether you're a newer trader or you've been doing this for a long while, when we put all the pieces together, price, trend, automation, understanding expiration, watch list building, the formula behind knowing how to manage risk, how many contracts to trade, etc., you're going to be completely amazed at the trader that you become. Like we said, it's a total transformation. It's a total transformation in your trading. All right. If you want more information, by the way, I mentioned that if you need to call the office, especially if you're an existing member, or if you have some questions, there's the number, there's the email. All right. There's a number, there's the email. If you do have questions, we have folks who will talk with you and walk you through getting you what you need. By the way, we do have PayPal credit. So if you want to use it and take PayPal credit, you can apply for a line of credit, 0 interest, and you can pay this off over the next 6 months, which is pretty darn great. So, Rob, yeah, I want to do this elite thing, but yeah, I sure would love to be able to pay for it over the next 6 months. It makes it a whole lot easier to jump in. So super excited about that. So again, we have our non-member pricing here and what you get in each package. And then our member. There we go. So let's get to the questions, all right? And again, just a quick reminder, members, give the office a call if you have some specific questions, and they'll be able to help you out. Gang, it's going to be here before you know it. And this year's, we're already in the middle of February, right? So we're going to pick up the pace. We're going to start getting you to the kind of trading results I know you can get. Starts on Tuesday, February 18th, gang. simpletrading.com/immersion. Now, questions? Just boss. All right, here come the sticky notes. Huh? No, man? Oh, okay, okay. All right. How can I use this on futures? Oh, okay, great question. Yeah, and by the way, for those of you that are wondering, we will have a session on futures. I've been trading futures since I was 15 and a half. I'll be 54 this year. So I have a deep knowledge of futures and how I've been trading those. And yes, one of the sessions will be dedicated to futures. But let me go to that NASDAQ chart, because the question is, can I talk about how to use this in futures like the NQ? By the way, anything I'm talking about with futures can be applied to crude oil futures, Bitcoin futures, the S&P futures, gold futures, bond futures, corn, it doesn't matter. So a couple things to know about futures. First of all, you have to use a margin account, right? You can buy long calls and long puts and futures as well. But for most traders that are wanting to get into futures, they want to trade either the micro or the mini contract, which is great. I love them too. I'm a big fan of the minis. Before that, I had to trade the full-size S&P. I love the electronic minis. They're amazing. The same process of knowing where the liquidity is, the same process of quantifying risk to your account with maxing out at say 3 or 5%, all applies to futures. But let me say this. It's really important, and believe me, I love futures. Like I said, I've been trading them a very long time. Please don't start there. I know, Raghee, I wasn't expecting that answer. Please don't start with the futures. When you're in the immersion, I'm going to teach everyone how to make their way from maybe kind of entry level or sort of intermediate trader to being able to trade futures, to being able to trade futures options, and even the SPX, gang. There's a process to get there. A lot of times traders start with the SPX or they start with NASDAQ or S&P or crude oil futures, and they turn a small account into no account because of the leverage, right? But there is a way to study the price action, trade it, get to know it without dealing with the extreme leverage and extreme risk, and then finally make that jump into futures. You do not want to start there. I've seen too often traders with stars in their eyes want to trade futures, and they don't take these important steps that I'm going to teach you how to do in the mastery. And by the way, the indicators that I'm sharing with you, they work on futures as well. Right? We have price movement ranges for futures, the top tier candles and the multi-structure all work for futures. That's one of the first things we look at in the mastery room every single morning. But you want to get there slowly because the leverage and the volatility of futures contracts can be absolutely, frankly, devastating if it's not handled properly. So I will teach you how to get there. It's a step-by-step process. And you'll notice the way our schedule is broken up. If you want to day trade futures, you can join me from 9:20 to 10:30. If you want to swing trade futures or swing trade stocks that are sensitive to futures, you can join me between 10:30 and 11:30. And that's the cool thing about this schedule. It's consistent, right? We talk about the same thing in the same way every day based on the schedule. So based on what you want to do that day, you can join at those times. And yes, futures will be part of the process. But again, I cannot recommend enough. You've got to focus on managing the leverage first before you jump in. Otherwise, and I don't want to see traders lose their money to other traders in the market. So that's why I kind of put that caution out there. So we talked about expiration dates. We talked about futures. And by the way, once you understand futures, you're going to be able to trade certain stocks even better. Energy stocks, gold miners. We're in gold right now. Gold miners are the next thing we're going to start looking at. Okay. What else we got? Oh, okay. All right, gang. I guess that's it. So I don't want to keep y'all much longer. I want to respect your time. Thank you for being with me for the last 75 minutes. If you've been taking notes, hopefully you can put some of these ideas to work tomorrow, right? A lot of what we're talking about here is extremely actionable. Whether you have these indicators or not, put some of these ideas to work. If you're thinking, Rob, this is exactly what I need. I need to transform my trading. I don't have a way to understand real-time shifts in trend when it's organized into a trend. I don't have a real-time automated way to find volatility support and resistance or automated support and resistance like the Darvis. I didn't know how to trade chop versus trends. That's probably one of the biggest things. Write this down, gang. Number one job, prioritize trends, right? Find the trends first. Okay. Number two, make sure you know what sets of rules, tools, indicators for chop and what sets of rules, tools, indicators for trends. A lot of times traders get hurt because they treat every market like it's a trend, or they treat every market like it's a chop, right? If you can start to find those, and you saw how easy that was with the multi-structure, but when you can look and say, this is a trend, this is not, this is bullish, this is bearish, right? That slight nuance is going to make a huge difference in your trading, which is why we've automated it. Okay. All right. So really excited to see you all in the immersion. Really excited for you all to meet the folks at our mastery. It's the biggest mastery at Simpler, and it's the most positive trading focused mastery you will find. We mean business. We take how many trades? Oh, what are you asking? Oh, how many trades am I in a given week? Let me give you two samples. Last October, September, October, November. So, by the way, the question is that Trish Boss asked me to let you all know, what kind of trading activity you can expect. So, number one, I don't get to determine that. The market does. So, I'll give you two examples. October, November, we had a lot of good trends. We had just come off the first 50 basis point rate cut from the Federal Reserve, and we had about 8 or 9 open swings at any given time over the course of about 60 or 75 days. So pretty active, right? And by the way, the last quarter of the year, I think I put another 20% in the account. This year, holy cow, chop. Powell changed the monetary policy outlook on December 18. You're going to learn how to read macroeconomics, number one, in the simplest way you've ever seen before, and in the most clear way. So you're going to find out a lot of the gobbledygook that they talk about on television is just nonsense. You're going to learn about the macroeconomics that matter to traders. So there was a macroeconomic shift on December 18, and we've seen a lot of confusion since then. So now, right now, I have 2 open trades, right? We bought gold GLD calls for about $400. And right now, by the way, those options are about, I think, $1,100 or $1,200. That's an open trade right now. We took just a handful of days ago. And we just bought RTX. Those were our 2 open trades right now. So a lot of it's going to depend on the number of trends and the number of triggers we get. We never impose our will on the market, right? But when the markets get clear, S&P, NASDAQ, Dow, crude, gold, whatever, we can be busier. So it really depends on, can we manage risk and find trades with follow through? And trends, it's an embarrassment of riches, like most of last year. Last Q1, to give you an idea, it was nothing to have 8 or 9 open trades throughout the first 90 days of 2024. By the end of Q1 of 2024, we were up over 230%. That's the kind of environment we were in. This year, it's much different. Lots of chop, lots of uncertainty, and monetary policy shifts. This is why I'm saying the immersion right now could not be happening in a better time. Because if you could learn to trade in this environment, when the trends come back, and they will, right? I'm telling you that from 35 years. Trends come and trends go. But those traders that learn how to trade in an environment like this is like Hell Week for Navy SEALs, right? You survive this, you can survive anything and you can thrive. And by the way, we're doing pretty well. February has been pretty good to us. And we put on 2 new trades this month, 2 winners. All right. January was a little tougher though. So it depends on the market. That's the answer, gang. That's the best answer. No one can say we're going to take 5 trades a week or 10 trades a week. They're forcing trades, and a lot of those are going to end up being losers. Right. So I'm here to give it to you straight, gang. The markets have been very good to me and my family. My mom was kind of the first trader investor in my life. And I know what she was able to do at a very young age with the market. And I'm passionate about not only you learning how to trade, but you know what I'm really after? If you have nieces, nephews, kids, right? Your best friend. I want you to be able to be that person in their life that introduces them to trading so they can have the knowledge to take their money and grow it and not be at the mercy of Wall Street and all the gobbledygook and the confusion, right? I want you to be empowered and empower the people around you, right? Okay, gang, that's probably as good a place as any to wrap up. Thank you so much for being here. Thank you for your time. Cannot wait to get to know you. Can't wait to meet you on the other side. All right. Be good to each other, and I will talk with you soon.